I want to challenge you to forget everything that you think you know about the financial markets. You see, with the endless stream of failures that have come out of the financial system in recent years, most people just don't see the markets anymore as a reliable place to make money. And that's even true for professionals on Wall Street, who are trading and investing in a traditional and conventional manner. And this is because their approach and their expectations for profits are just plain outdated for today's markets. But I'm about to show you the other side of the coin, which represents that infamous 1% who truly do understand how to multiply and compound money in any market for real, meaningful financial freedom. And in a little while, I'm going to offer you the opportunity to learn step by step exactly how the markets can be measured in an objective manner to know at any given moment whether there's money to be made there or not. And in this video, I'm going to actually walk you through how this business-like approach to the markets can actually make you more money faster and more reliably than any other business or investment opportunity that you've been exposed to. More importantly, you're going to be able to make money with significantly less risk and safer results. But before I give you the solution, you really need to understand the scope of the problem. Now, in the last page, we promised to show you how few Wall Street money managers actually beat the markets consistently. And I thought I'd just take you step by step how we got these numbers and how shocking it was for me when I discovered this. It really all started when I saw this article on the CNN Money website. And again, we're going to post all of these links down below this video so you can actually do this yourself if you want to walk through this and just see how shockingly real these numbers are. The headline caught my attention. 79% of fund managers didn't beat the S&P. And I thought, well, there's probably a catch somewhere. They're putting this out there to grab the headlines. So in order to either prove or disprove that 79% number, I wanted to do a search and find out how many funds actually did perform. So I went over to Yahoo Finance, where they have a fund screener. And the first thing I needed to do was figure out how big this database was. So I went ahead and used any fund in their database, including stocks and international funds, bond funds, anything you can think of. And I just wanted to see how many managers managed funds longer than 1 year. So we don't want anybody who just launched a fund 6 months ago. We want them to be in business for at least a year. And you can see, and this is another number I want you to remember, because we're going to talk about this later, that there are 26,507 funds. Well, it doesn't take a professional in the world of finance to realize that that's kind of a ridiculous number, given the number of stocks that exist and the investment opportunities that there are. So obviously this is a bloated industry, and it's very questionable as to what kind of value they're actually delivering to their customers. Well, we're about to find out just how little. So now it's time to get down to brass tacks. We know how large the database is, and let's start culling this down to see who actually is beating the markets. And we also don't want to look at beginners. We want to look at people who've been doing this for a while. So the manager tenure was set at longer than 5 years. We don't care about whatever the ratings are. Again, that's just somebody's opinion. We want to look at real numbers. How much did these people actually make for their clients? And if we look over a long time, like the last 5 years, we want to make sure that they're up more than 10%. Now, for those of you who understand the real hidden tax that inflation offers, we've had somewhere between 2 and 6% inflation for the last 5 years, depending on whose numbers you believe. But the concept is, if you put money under your mattress and just let it lay there, it's actually losing buying power. Prices are going up, and that's the result of inflation. So if your money's not making money for you, you're actually not just standing ground, you're losing ground. So being up more than 10% on an annual basis is really pretty important, especially if you're paying someone to manage your money, someone whose full-time job it is to know what strategies are the best and what's working in the current market environment. Now, for those of you who say, well, but I'm not really someone who's active in the market, I don't know that much about markets, this isn't really relevant to me, I would really challenge that. You'd be surprised how many people have a 401k, an IRA, a pension fund that has a huge exposure to the market, and more importantly, is run by a Wall Street professional money manager, such as we're searching through here. So it's very important that you understand what's happening to your money. All right, so there's our basic scan. In terms of fees, there are a bunch of different fees. Obviously, you'd like to pay no fees, but let's be generous. Let's look at everybody less than 6%. So let's go ahead and search here. Remember, 26,000 funds in this database. Kaboom! 29 funds out of the 26,000 that beat. Remember, these are all run by professionals, people who are supposedly the best in their business, people who knew enough to be given the responsibility of managing your money. And of that, only 29 can be said to be winners. So that's a pretty shocking statistic. Let's just go ahead and look at that in terms of real numbers. So we had 26,507 funds in the database, 29 managers who actually performed better than 10% over the last 5 years on an annualized basis. So that comes out to 1/10 of 1% winners and 99.89% losers. So think about that number for a minute. Pretty shocking, pretty disastrous. Okay, so that's the problem. Are you a little hot under the collar, a little angry? You should be. This is I think, a scam based on ignorance. People don't realize how poorly they're being served. Those of you out there who are actively trading yourself certainly know that this is a complex business. However, it's a simple business, and that's really what I want to lay out for you here. What people don't realize about making market returns is that they treat their money management as a service. And for those of you who have purchased services in the past, you always pay, the fee is always there, and you may or may not get good service. We are the opposite. We treat trading as a business. And what's the goal of a business? To make money. And if you look out there in the American business environment, how do people make money? How do people make a lot of money? Well, let's take a look at McDonald's. Is that a complex business? Difficult? Hard to understand? Absolutely not. Coke, French fries, hamburgers, very, very simple business. But the real secret to McDonald's, the real secret to why they make so much money, they have one thing that they do. They do it very, very well and very consistently, and they do it over and over and over again. And that's really what I want you to understand next. The way that you make money in the market, a lot of people come to it thinking of it as a lottery ticket, as a way to kind of gamble, and you know, some people are lucky and some people aren't. Nothing could be further from the truth. Sometimes they'll get lucky and really hit it big, the same way that you would if you went off to Vegas and happened to hit a hot streak. But on the whole, those people are going to end up walking away losers because they're not treating their investing with a business-like perspective. Now, I've been training traders and working as a consultant to folks in the financial industry for almost 15 years, and it's always mystified me. Imagine any other business, especially a business in which a skilled trade is the basic value. Imagine you're an engineer and you want to be able to build bridges that don't fall down. Well, what would be the logical steps to that career? Well, first of all, you'd have to graduate high school, and you'd want to have a good, solid sense of your maths and sciences so you can understand how the structures are built, how the mathematics of loads and all work. So next, you're going to need to go to probably an undergraduate degree, 4 years, in which you're going to learn more fundamentals. And then you might even go through a master's program where you have an additional couple of years where you're studying not only now the fundamentals of how this all gets put together, but the applicational strategies, how you actually turn this theory that you've been looking at on a chalkboard or in a textbook, and how to turn that into something that can live and thrive in the real world. Well, this is something that seems very logical for anybody who wants to enter a career where you make a lot of money and you provide a lot of value to the world. Think of medicine, how long that takes, and how much practice. I mean, after you get out of med school, you go into the internship program and you become a resident, and there's a long, long apprenticeship process before you ever are handed a scalpel and work on a patient. But for some reason in the market, there's this erroneous viewpoint that you can come in, even though this is a simple business, without understanding the complexities of how it all fits together. So it'd be a little bit like you jumping into the last 3 months of a master's program in chemical engineering, and then wondering why all of the nomenclature and all of the technical stuff they're talking about is completely over your head, and you're just feeling lost, frustrated, and confused. And bottom line, you're not getting the kind of results that you think you could and probably do deserve. Now, in our private community, we take the opposite approach. And so our teaching is very much in a layered, structured approach where we teach the fundamentals first. We make sure that everybody's mastered those before moving on to the next level. And so what happens is you get these different analysis tools that are layered one on top of the other, each one complementing the previous lesson, and each one adding to your ability to predict the market. Now, we have a very comprehensive and robust analysis structure that allows you to look at any market in any time frame and really determine with a high degree of precision and whether that market is worthy of taking a risk. Now, folks in our community are consistently pulling in 1 to 2% on a good day. So let's just go ahead and use that as a baseline. 10% per month is extremely possible, and you'll see people doing that in our live interactions on a very continual basis. 10% per month, let's just go ahead and build that out as a model. Again, remember the McDonald's analogy. You're doing small profitable things over and over, responsibly, reliably, and consistently. So let's say you start out with $5,000. Well, your first month you make 500 bucks. No big deal. But now we get into the magic of compounding. Remember, consistency is everything. So if you take that $5,000 and add to it the profits that you made in the previous month, now you're looking at a capital base of $5,500. So if we just do the math again, another 10% gain on a $5,500 account, you just gave yourself a raise. So through the magic of spreadsheets, let's go ahead and propagate this out, and let's go ahead and put this out 36 months, because for those of you who've done anything in small business, you know that it usually takes 2 to 3 years to get a company to break even. It's a pretty solid business plan if you can go ahead and build a 3-year business model. So here we go. Starting out with $5,000, 10% profit per month, nice, steady, repeatable gains. At the end of a 3-year project, you're looking at $140,000 in your account with about a $14,000 per month income stream. So what does that mean? 14,000 times 12. You're looking at $168,000 in cash flow income off of your trading business. Has that got your attention? Great, because that is the kind of cash flow that is possible in the markets. We have a track record of consistent success in our students. Again, our private community, we're all there live in real time. There's no hiding behind live. We're all there trading our real money and answering questions and interacting live as the markets are unfolding their patterns and prices beneath us. And we've got some incredible success stories. And again, the secret is this is really simple. Small, repeatable gains compounding over time to turn into extremely consistent cash flow. And this is a business that you can literally run off your laptop. As I record this, I am on the road actually. I traded this morning on my laptop. As long as I have good internet connection, I can work from wherever I am. And that's one of the things people really can't wrap their mind around until they've watched us trade and analyze these markets in real time, is that this is not a stress-filled, fear-filled, frustrating experience. Imagine if you could go into any market in any time frame and know right away whether that market is conducive for trading, whether there's profit potential, or whether you should go away and come back a few hours later and see if the profit potential has appeared. Imagine if you had that kind of power, would not have to feel like the market's out to get you, that there's some kind of nefarious conspiracy to part you from your money. We've already proven in the previous example how few of the professional money managers on Wall Street actually can beat the markets. Yet we can produce 10% profits on a fairly regular monthly basis. And again, this is not hyperbole. You'll see us do this live and in real time over and over again, just like the McDonald's. But we're going to show you how to manage your risk, to reduce your risk exposure to levels you never thought was possible, while maintaining that upside potential that delivers these consistent profits over time. So now there are probably two groups of you out there. Some who have really not been exposed to the value of trading as a business, and therefore kind of excited by the potential that I've just shown to you here. You actually are in a really great place. For the rest of you, those with market experience, who have probably followed that road of frustration, buying information, having it not work out as you had hoped, I hate to say it, but you have a lot of unlearning to do. But we're going to help you through that. We're going to take you back to the basics and help you put all of the knowledge that you have, all of the information that's currently in your head, into a structured and layered approach. Now, some things we teach are going to be very familiar because we're exploiting a lot of crowd tendencies, but there are some other things that may seem very familiar that we're going to offer out with an extremely unique and proprietary approach that'll kind of blow your mind. So I invite you to join us as we take you through a 4-day workshop sponsored by 3D Apex Trading to not only prove our model, prove our point, but offer you a real foundational education in trading the markets as a business. Our experience has been that if you join our private community and have access to the kind of live interactive support that is the backbone of our learning, you're going to have that success that has always seemed just outside your reach. So I really look forward to seeing you there and working with you in the future. As always, thanks for listening. Good luck and good trading.